Mike Sullivan. I'm a former IRS agent and teaching instructor with Internal Revenue Service. Welcome to my YouTube station. It's the home of the 4-minute video. I worked for IRS for 10 years. I've been in private practice for 40. I'm a national expert in IRS resolution matters. I've been on the national news a lot. You can see my website at 777irs.com, and you can see my entire team of former IRS agents. Today, I'm going to go ahead and talk to you today about IRS tax debt relief services and what they are, but mainly IRS tax debt relief. IRS tax debt relief comes really in three forms. I'm asked this question a lot being a former IRS agent. There's three ways to go ahead and get you relief when you owe tax debt. There's four if you include a Chapter 7 bankruptcy. I don't recommend that a lot. I've worked thousands of cases, but the three ways that I recommend is, first of all, know this: IRS is going to take your financial statement. If it's in the service center, they're going to take a 433F. That's their financial statement. A revenue officer will take a 433A. The offer and compromise, they take a 433A OIC. But generally, how the tax debt relief works is this. When IRS takes that financial statement, there's three categories of closing your case: either currently non-collectible, payment agreement, or an offer and compromise. Let me explain each. The currently non-collectible means they looked at your financial statement. You don't have the assets to liquidate to pay the tax, or you may, but they don't want to collect them at this time because there's problems. So IRS is going to turn to your income and expense analysis. And when they do that, they see you're just really you just can, you're just barely making it. So IRS will take that case and put it into currently non-collectible. Sometimes it's called a hardship. Currently non-collectible, what happens, they keep your case in a suspended status for currently non-collectible, but it will come out at another point in time. They'll grab your refund, but you can change your W-4 and they won't grab your refund. Sometimes they keep that in currently non-collectible for 1, 2, 3, 4, 5 words. We don't know. It all depends who's closing the case, and they determine when they want the case coming out. The next thing is the payment agreement or the installment agreement. IRS simply wants you to go ahead and make an agreed payment plan, usually on their terms, not on yours, to go ahead and pay the tax debt. If you think it's too high, you should call a professional, because a pro like me can probably lower that agreement. The other thing you can do is settle your debt through the offer and compromise. I taught that program at IRS. I used to accept offers and deny offers. Before you make a knee-jerk reaction to go ahead and settle your tax debt because you've seen this ad, don't do that. You have to call a professional, because only attorneys, CPAs, and enrolled agents can negotiate on your tax debt on behalf of any taxpayer. So you really want to call somebody and give them your financial statement and let them make the determination whether you can settle the debt. When you call these big companies, they're going to take your case, say they can settle the debt, and they can't. But in the meantime, you paid all this money, and then they'll say, oh, well, I'm sorry it didn't work out. IRS changed their policy. You have to make sure a tax professional looks at it and tells you you can settle your debt. Then you go ahead. You pay the money for a true professional because they're going to settle your debt. Anyway, that's what I've done. I've worked the offer and compromise program. I am an expert for that. So if you need to call me, give me a subscription. Thank you. My website, 777irs.com. You can learn all about me, and we can settle your debt if you qualify. Thank you.